Real quick before we dive in, this isn't financial advice. This is just educational. Trading's risky. So always do your own research. Cool? Alright, let's get into it. Look at this Bitcoin chart for a sec. See that candle? The moment it breaks through the span, price just went absolutely crazy. And that wild part, you actually couldn't spot a high probability setup before it happened. Stick around, cause in a sec I'll show you exactly why that breakout triggered and how to spot similar strong signals next time. So here's the deal. These bands usually sit right above and below candles, almost like guardrails. When price pushes through the upper band, that's usually when breakout setups kick off. That's our buy signal. But we do not just, get into trade and pray it works. We trail the setup. We trail the stop loss using the lower band. That way, if the move really runs, we're not just hoping. We can manage our open profit the whole way up. And later I'll show you a small tweak that makes trailing a stop loss even smarter. Stick with me for that. Now, flip it around. Same chart, but price drops through the lower band. What happens? Same thing. Impulsive move, just in the opposite direction. That's your sell setup. And same idea, trail it with the upper band as your stop loss. That way, even if you're shorting, you can write it down for potential max profit without stressing about missing the exit. I'll also show you a shortcut to filter bad sell signals a bit later, so don't skip ahead. But hey, let me be real. This isn't perfect. Nothing is perfect. There's no such thing as 100% win rate. And if someone tells you there is, they're lying. In a strong downtrends like this BTC example, you're gonna see the indicator throw out some counter trend signals that just don't work. You'll get chopped up if you take every single one. That's trading reality. And that's exactly why we need a filter. And guess what? I'm gonna show you a filter tweak that significantly reduces most of those false signals in a sec. So, how do we fix it? Easy. We bring in trend confirmation. But before I show you, do me a quick favor. Smash that like button real quick. It literally takes 1 sec, but it helps a ton with the channel. Alright, the filter we're adding is a trend identifier called market bias. Here's how you set it up. Open TradingView, head indicators, type market bias and add it to your chart. Once it's loaded, you'll see this colored ribbon stretch across the candles. By default, it's set to 100 period. That's not triple, but I prefer a bigger picture. So go into the settings and here's the exact tweak. Set the period to 200. Then smoothing to 200. And after that, the oscillator to 21. Now, it's super straightforward. If the ribbon is green and the price trading above it, you're in an uptrend. If it flips red and price is below, that's a downtrend. That's your filter. Basically, market bias acts like a traffic light. Green means only long signals and red means only shorts. And here's the kicker. This small filter tweak helps minimize a lot of fake breakouts from messing with your trades. Now, quick question for you. Remember that first indicator we use with the bands for breakout signals? If you do, type yes in comments so I know you're following along. If not, no stress. It's called HLOT Optimized Trend Tracker, or HLOT for short. Just search it on TradingView. Stick around because I'll show you exactly how to fine-tune it to catch only higher probability signals. Alright, so let's break HLOT down. You'll got two lines, HOTT for the highs and LOTT for the lows. The area between those two is called the flat zone. And when prices are stuck in there, you basically sit on your hands. No signals, no chasing, just wait. Now, it does need some fine-tuning to really shine. So here are the exact settings. Go into the indicator settings, change OTT period to 3. Then optimization to 0.8. And the highest lowest length to 9. Once you do that, the signals can become cleaner and the noise can be filtered better. Stick around, because after this I'll show you a simple way to combine market bias and HLOTT so you only take the most reliable trades. Alright, now let's pull it all together and talk trading rules, especially risk management. And listen, the sport is crucial, so don't skip it. Rule number 1. We do not enter counter trend trades, ever. Example, market bias ribbon is green, so trend is up. Price breaks the HLOTT line, that's technically a bearish breakout, but it's against the trend. We escape it. Same thing the other way. The ribbon is red, trend is down, but price breaks above HOTT. Looks bullish on the surface, but as counter trend. Again, no trade. And stick around, because next I'll show you exactly how to spot the high probability signals that actually hit. So when do we actually pull the trigger? Let's look. Market bias ribbon is green, trends clearly up, and price breaks above HOTT. That's a bullish breakout aligned with the bigger picture. That's a legit buy. A stop loss goes just under LOTT or right under the last swing low. And I can't stress this enough. Don't risk more than 1% of your trading account on any single position. Now for targets, you've got two solid options. First, trade your stop loss with the LOTT line. That's amazing for catching those huge runs when the markets just kept trending. Or if you want something simpler, stick with a clean 1 to 2 risk to reward ratio. Double your risk. Take profit, done. Both methods are valid. It really depends on your style. And for shorts, it's the exact same playbook but flipped. Ribbons red, price breaks below LOTT, that's your green light for short. Stop loss goes above HOTT or the last swing high. Risk capped at 1%. So yeah, that's the full system. Breakout setups, trend confirmation, and a smart risk management all combined. And if you're ready to level up even more, the video on the screen right now covers what I honestly think is a very effective free buy-sell indicator on TradingView. Go check it out. Happy trading!